quarter here. So this is a quarter, it's actually 3 months, the whole thing. And remember, in the market, remember there are quarterly shift. You remember companies, they release reports each and every quarter and stuff like that. So these things, they tend to have a lot of impact and stuff like that. So, but I was trying to check on volatility if it can actually give me direction on where price is going, because it just gives you the directional bias of things. So looking at here, you can see that you look at the highest high of that quarter. This is the highest high, and this is the lowest low. Yes. You just look at the highest high, and this is the lowest low. In fact, this is the lowest low here, but this is the lowest low before this explosive move. You understand? So the lowest low before this explosive move, it simply means there is lots of liquidity. Price has to come and collect everything that is resting here. So when price get to form the highest high here, the moment you see price dropping and actually give you an idea, because if you can see here, it's now breaking previous lows and stuff like that. So you know definitely that there is a shift in market structure now, and price is definitely coming for this low here. So if there is an order block here, you're just gonna ignore that thing. Getting? So you get to see the same thing here. This is the lowest low, and this is the highest high. So you get to see price creating a lot of imbalance here. So once you see price breaking structure here, indicating that we are going down. So one thing that you need to keep in mind is that price needs to collect all this liquidity that was not being collected as price was going up. So you definitely know that price needs to get to this level here and take out everything that is here. So for you to be looking for order blocks at this level here, it's not going to be that precise. So what you're going to be looking for from here going down, you're going to be looking for sell setups. And remember, one thing that we need to, when there is liquidity void or price imbalance, the thing that price will do is to try to cover 50% of it, and then you get to see a retracement. You're getting, because price doesn't stay that much on discount. It doesn't want to stay that much on discount. So that's why you get to see price giving you something like this, and then it retraces 50% going down. And then after that, it pull back. And when it pull back from this move, it's going to give you an OTE entry. It's going to be your 70% entry that you're going to get. You're getting?
Yes, I get it.
Yes. After it just covered this long move that it have, it will pull back 50% equilibrium. It doesn't stay much at this level. Why? Because it's simply basic supplies and basic supply and demand. Because we definitely know that if there is a sale, it doesn't stay that much. So gets to see price pushing up. And when price push up, the one thing you're going to be waiting for here, you're going to be anticipating for your optimal trade entry. So you pull your fee from this level here, waiting for price to get at least to this level of SMT or OTE, which is our optimal trade entry here. The SMT is 70.5%. This one is 79%. So you're going to be anticipating for price to get to this level here. So price get to this level. And when price get to this level, definitely, my brother, price, the first liquidity that is going to target is going to be this low. This is going to be the first low that price will target before it gets to the main thing here. So it gets to push down and push down and push down and push down. What you're going to be anticipating for, these are the moves that you're going to be looking for any retracement going down. And then it gets to this level here, which is the last liquidity here that we have indicated. It collected everything. And then after collecting everything, guess what it did? It pushed up. And you see this, and you see this explosive move that it gave you here. So you get to have this explosive move. If you just draw something like this, you get to see that this is what we call it stop runs. So this manipulation in price, we say this is a stop run, just coming to the stops, and then after taking the stops, it moves. And then if you look at this structure here, this is gonna be a breaker structure, and a breaker structure, it indicates a shift in market structure. When it comes to a breaker structure, in a mitigation structure, they indicate a shift in market structure. So the moment you get to see those And the more you see it on a higher time frame, that's a long move upward. So you get to see that there is a shift now in market structure. Price pull back a little bit, you get to this level of your breaker, it retraces. If you want to take a trade, you take a trade, you make money, and then it push back, but it wants to close this liquidity that we get to see here that has been created here. So we know that this is actually a retracement. It's not a reversal, because if it's a reversal, it needs to take out everything that is resting here.
Yes.
But since it's a retracement, it's just price coming back to close what it has created here, this price imbalance. So we get to see something like that happening, and it gets to this level of our order block. And guess what price does? It moves up quickly.
It moves, yeah.
And then after moving up, it just retraces a little bit after getting to this level here, push down a little bit, and it continued to go up, and it continued to go up. So basically, that's something that I've noticed with the just you marking your high and marking your low. You get to have an idea which is the next liquidity to be collected. You see, this is the high, this is the low. Which is the next liquidity that will be collected? Definitely, it's going to be this liquidity that is here that will be collected. It's the same thing that you get